Hey guys, Felipe here. Happy Monday. Hope everyone's doing good and had an awesome weekend. So as you know, I'm here to keep you up to date with current market news and teachings. And this is in no way, shape, or form financial or investment advice. This is for entertainment and educational purpose only. So with that being said, I'll go ahead and jump right into it. I have a bit to share today. So basically, which I've been talking about this for a while, but it seemed that the AI FOMO kind of put a stop to it, right? Or kind of changed the market environment. So, for example, Taiwan Semiconductors company, which is the largest producer of semiconductors, basically in the world, has been having revenue declines, net income declines, and they've even advised that the AI FOMO that is going on hasn't necessarily translated into more sales of these semiconductors that they produce and so forth, right? So basically, Taiwan Semiconductor imploding demand from key customers, $150 billion Gen AI to the rescue. So basically, unsurprisingly, TSM reports impacted top and bottom lines in first quarter, for the second quarter of 2023, thanks to pulled forward growth from the hyper-pandemic period and ongoing inventory correction. This cadence may suggest that the foundry's key customers, such as Apple, AMD, and Intel, are experiencing implosions of demand. So demand is actually wavering instead of what the market and all the market cheerleaders are saying, that things are great, things are amazing, and so forth. Because ultimately, the market cheerleaders, such as the media and so forth, are not going to paint they want to be the cheerleaders to keep kind of the FOMO going because they make money off of this stuff. For example, so as for an example here, analysts stating that while TSM is a buy with a long-term price target of $147, is basically boosting FOMO. You never listen to analysts because the half of them don't know what the hell they're talking about. So kind of on this note, I'm going to switch and kind of show you the actual picture, right? In terms of the actual fundamentals, right? So TSMC, Taiwan Semiconductor Manufacturing Company, which is the world's largest producer of semiconductors. They have all the fabs. Fabs are basically the facilities where all these semiconductors are produced. And so to major corporations, as for example, Apple, NVIDIA, Intel, and so forth. So for example, here they're saying year over year, second quarter revenue decreased 10%, while net income and diluted earnings per share both decreased 23.3% compared to the first quarter of 2023. Second quarter results represent a 5.5% decrease in revenue and a 12% decrease in net income. It's all FOMO. I've been saying this about the whole AI stuff. Whoever's you're making money out of it, great. Ride the momentum. Just don't get caught when the wave turns the other way around. In the US dollar, second quarter revenue was $15.68 billion, which decreased 13.7% year over year and decreased 6.2% from the previous quarter. So they're basically have been actually seeing declines in net income and in revenue, right? So not exactly what the media or the market cheerleaders are focusing on, right? They're focusing on the FOMO. They're focusing on the trends. they're focusing on ultimately the mania, right? Which is the whole AI. Anyone mentions AI in their company, stock pops, right? Just by the mention of AI, which in reality, AI is just algorithms. Algorithms used for a specific purpose for that specific AI product or whatever. That's ultimately what AI is algorithms. So in here, we basically have operating results, review, summary, and you can see here, second quarter 2023 as compared to second quarter 2022. Earnings per share, a negative 23% decline. Net revenues, negative 13% decline from last year. Net revenue, again, basically negative 10%. Gross profits, negative 17.5%. Operating income, negative 23%. Net income attributed to shareholders of the parent company, negative 23.3%. Wafer shipments. Wafers are basically the actual semiconductors, negative 23.2%. So, I mean, and this is the manufacturer of all the major corporations that utilize their semiconductors to produce these so-called technologies, so-called AI technologies and so forth. So if this company is selling less of the products that are used or utilized to create these things, what is this telling you? It's all FOMO. It's all hype. It's a wave, right? It's a trend that you can enjoy and ride, but don't get caught when the thing ends, right? Because it comes down really quickly. So second quarter 2023 financial highlights. Net revenue was NT, which is a new Taiwan dollar, which I won't go into the conversion. I'll keep it simple, US dollar. But in this case, representing a 5.5% decrease from new Taiwan dollar in the first quarter of 2023, and a 10% decrease from new Taiwan dollar in second quarter 2022. Operating margin was 42% down, 3.5 percentage points from first quarter 2023, and down 7.1% from second quarter 2022. Net income, which ultimately for any business that is making any kind of revenue and money, net income is hands down the most important thing. So net income attributed to shareholders of the parent company was new Taiwan dollar, down 12.2% from first quarter 2023 and down 23% from second quarter 2022. So you can see that revenues and net income are basically trajecting downward instead of what all the media cheerleaders and all the FOMO is saying otherwise, right? That's why I love fundamentals, because they paint the actual picture. But ultimately, markets are they trend, right? They come in waves and things trend. And right now the big trend is AI, which is very similar, one can speculate, to the dot-com bubble of the 2000s. The bad thing to that, the other side of the coin, is that after the dot-com bubble burst, it took 10 years for the market to recover from the highs of the 2000 dot-com bubble. So I'm curious to see what comes after this big AI mania that in reality is not really producing a lot of revenue and net income for these companies. A lot of these AI companies are actually not making any money. They're money pits. So here, basically, in second quarter, revenue decreased 5.5% quarter over quarter as our business was impacted by the overall global economic conditions, which dampened the end market demand and led to consumers ongoing inventory adjustments. Sequential revenue from HPC, smartphones, IoT and others decreased 5%, 9%, 11%, and 5% respectively from first quarter 2023, while automotive and DCE increased 3% and 25% respectively. Operating margins declined 3.5% points sequentially to 42% in second quarter 2022. Net income attributed to shareholders of the parent company was new Taiwan dollar down 12.2% from the first quarter of 2023 and down 23.3% from the second quarter of 2022. Net income is down 23%, yet the FOMO AI hype is causing these crazy valuations in some of these companies, specifically the FANGs like NVIDIA, Microsoft, Meta, and so forth, right? But ultimately, when the party is over, we'll see what happens, right? This is a wave that you ride, basically. So yeah, that's some of the interesting things I've been kind of seeing that the media or the cheerleaders are not pointing out, right? They're just pointing out, or they're feeding the FOMO, they're feeding the hype, right? So free cash flow decreased new Taiwan dollar to an out of 166 billion to an outflow of new Taiwan dollar 83.26 billion in second quarter 2023, as the decrease in operating cash flow, mainly resulting from income taxes paid of new Taiwan dollar 120 billion, outpaced the decrease in capital expenditures during the quarter. So you can kind of see here, actually cash flow is not looking that great, right? You can just kind of see here in this graph. Free cash flow is the blue column here. You can see that you would think, with all the speculation and all the FOMO in the AI world currently, the father of the producer of all of the semiconductors, which basically supplies the big companies, is declining, having a currently decline in free cash flow. So it's kind of interesting, right? Kind of sketchy. Kind of an interesting thing when you actually look at the numbers, and it's not correlating with what the market is currently indicating, right? Which is an interesting combination. But again, market is more of a trending machine, as Benjamin Graham said. In the short run, the market is a voting machine. In the long run, the market is a weighing machine. And this is a beautiful example of this. It's basically just fueled currently by FOMO. But the thing about FOMO, it's typically temporary. How temporary it is, no one knows. But ultimately, it is temporary. So basically, let me swap over here. And I mean, wherever you look at, I'm not saying this company is in financial trouble or anything of that nature. What I'm saying is that the overall picture is that revenues and net income and cash flow are actually declining at a time that markets are looking like they're in a bull run or whatever, right? The S&P and NASDAQ has rallied tremendously from the start of this year, and it has been fueled by the AI hype, right? But I mean, in reality, you can kind of see just declines on this specific company. Why I point this company out again is because they are the suppliers to the major FANG corporations, right? Or all the companies that are benefiting currently from all the AI hype, right? So ultimately just declines, which again, this in no way, shape, or form is any expectation of the future. However, it just gives you an idea of what things are at the current time, right? So basically here you can kind of see a decline in HPC, smartphones, IoTs, an increase in automotive, DCE, and then a decline in others. Ultimately, the company is financially strong. I'm not saying this company is in any kind of financial struggle. I'm just saying their revenues, net income, and free cash flow have continuously declined. So they're in a declining, fundamentally, they're in a declining trajectory as to where stock prices are diverging and going the other way from where the actual fundamentals of the companies, such as revenue, net income, and so forth, are going the other way. So you have a divergence, which ultimately divergence ends up in convergence, and something has to match, right? Something has to meet. And typically, fundamentals such as revenue, net income, cash flow are the ultimate truth for corporations, right? So as you see here, free cash flow, which this is in millions, I believe. So a lot, it's declined 83.28. So just to kind of give you a picture of the actual fundamentals of, in this case, Taiwan Semiconductor manufacturing company, right? I would say the father of the semiconductor market. They have, I believe, 60% of the market share, and they are a major supplier to the big fan companies like Microsoft, Apple, NVIDIA, and Intel, and so forth. So with that, let's look at the charts and see what's going on with the charts ultimately. So let me just swap over here to the browser quickly. And let's see what's going on with the actual charts, which is some of the stuff that I've been finding kind of interesting in terms of, for example, volatility, and what volatility is showing in terms of, it's pretty quiet right now. The VIX index has been very quiet, which is an interesting thing to see, because typically when volatility is very quiet, it means that potentially a time of volatility spike might be right around the corner. So here we have a interesting situation where volatility is just been declining and has been pretty low in terms of historical standards. But typically, when this thing is quiet or just declining, it means inevitably there's a big spike to come. So that's an interesting thing to see, that volatility has just been basically down. It's comparatively low to where it has been not too long ago. Volatility is at 13.59. It's an interesting thing to see, because when volatility is very low, ultimately, inevitably, a big spike comes. As you can kind of see here, 2006, 2007, volatility was very quiet, and suddenly spikes began to occur. And that was ultimately during the financial crisis of 08, 09, right? And over here, another example, the 2020 COVID crash, right? Volatility was very quiet, suddenly a major spike. So that's definitely something to be watching at the very least. On another note, I like looking at this specific index. So it's USC SHPI, which is the Robert Shiller's housing index. And this is for year over year, which it kind of paints the picture that real estate prices have been declining year over year. since the top of March 2022 has been a consecutive downtrend. You can kind of see here in the past, 05, this thing started downtrending before the actual housing market had any issues, until eventually the actual housing market began to match this index. So this is a very interesting index to watch at the very least. So yeah, I just kind of wanted to go over this stuff because I've noticed so much FOMO lately because of the whole AI boom and all the market cheerleaders, all the media and so forth, just cheerleading the market and everything is great, everything's phenomenal, but they're not actually talking about the actual fundamentals of some of these companies that are saying otherwise. So yeah, with that, I'll leave you guys with a quote. In my experience, having positions in multiple classes psychologically allows for a certain level of detachment from each individual position. Most traders can make better decisions if they don't have all their eggs in one basket. So with that being said, diversification is key in order to protect ultimately your net worth, right? If you have all your eggs in one basket and something occurs to that asset class, you're more likely to take a bigger hit. So if you diversify within a reasonable amount of different classes, you have that added protection of different asset classifications, right? So yeah, basically, with that being said, if you liked what I shared with you and would like to hear more, please like and subscribe. I would really appreciate that. Thank you guys for watching, and I'll talk to you guys soon. Have an awesome week.